All right, guys. Well, it's your boy Gary Scott, aka the Solid Pip Assassin. I'm on this session today here, guys, to just break down the market to you, okay? Um, and try to make it as simple as I can. All right. If you guys see, I have multitude of things here on the charts. And if you have a notebook, I suggest that you get it out because there are going to be some. Excuse me. There is going to be some things that you definitely want to write down. All right. If you want to take a picture of this particular um, method that I have on the chart right now, please feel free to do so. All right, I'm gonna give you about 5 seconds. All right, let's go. So here's the thing. The market moves in threes. All right, the market moves in threes in many different ways and many different facets. All right, and it's about following the trend. All right, that's all it's about, following the trend and understanding where you're taking the trades from. Okay. So, first things first, things I want to explain to you are these market shapes, meaning market patterns. I'm sorry, market patterns. All right, you have a double bottom, okay? You have a triple bottom, and you have your inverted head and shoulders, right? Your shoulder, your head, your shoulder, all right? This pattern is sort of like if you put your back on the wall, but you're balancing on your head. All right, your head's on the ground, your shoulders are in the air, but your feet are to the ceiling. All right, wherever your feet are, that's where you want to go. Okay, so you have your inverted head and shoulders, then you have your double top. All right, you have your triple top, and then you have your head and shoulders pattern. All right, that's like you having your feet on the ground, and you're heading to the downside, right? Because that's where your feet are. All right, so now you have three trends. All right, you notice how we have three particular patterns for an uptrend, three particular patterns for a downtrend. All right, and then you have three overall trends. All right, you have an uptrend and a downtrend, and then you have a sideways or a consolidation moving market. All right, or accumulation. All right, those are the three things that you would consider this to be. All right, so when you see these sideways moving markets, you do not want to trade inside of those sideways moving markets. If you see the market is being choppy, right, you want to stay far away from it, right? But here's the thing, when the market does this, usually big moves come after. So whatever happens before the consolidation, right, will more times than not happen after. Okay. So if the market bought before it started consolidated, more times than not, the market is going to buy again. If the market sold before it consolidated, more times than not all the time, but more times than not, it's going to sell. Okay. Now you have, I'm sorry, you have your uptrend here where it makes higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. All right. Now, when the market Now, here's how you able to identify and understand if the market is changing its trend from a downtrend to an uptrend. Okay. This is how you know. So if the market, let's just say the market operated like this, right? If the market had a low at this particular point, right? A lower high, and the market decided to actually break this lower high. The moment that price breaks this lower high, right? Let's put it into perspective. If it breaks that lower high, then we're looking right? You have your breaker structure. Let me write this down again. So, boom, you have your breaker structure, right? You got price creating a new high. Then you have price pulling back down to an area of value. Now, you always want to trade off of either three of these areas of value. So you have a fair value gap, you have an order block, and you have a structure zone. Okay? These are where you take action. All right. If you are not taking action from one of these three levels, you are blindly taking a trade. All right, blindly taking a trade, and you do not want to blindly take a trade. So if you see price created this high, where did it pull back to? It pulled back to this fair value gap level. What do you want to see? You want to see price close bullish with a bullish candlestick above your area of value. The moment that that happened and that candle closes, it doesn't matter what time frame you on. This method that I'm showing you works on every time frame for every pair. Okay, because that's how the market operates. So price creates the high, comes back to your area of value. We wait for the bullish candlestick confirmation pattern. We enter the trade with our SL below this area of value. All right. We take our trade back to the high, above the high, right? Or a little bit below the high. All right. That's how you're able to maximize your trade, right? Again, price break structure, right? Creates that new high. Then what does price do? It finds a deep area of value, like this order block, before price broke structure. Unless it stops at structure, it's looking to find the deepest area of value, right, before it broke structure. That's what it's looking to find. The moment that price closes above this order block, what are we looking to do? We're looking to close. We're looking for a close, a bullish candle that closes above. And then we're entering there with our SLs below our area of value to then take the trade back to the high, above the high, or at the high, right? I'm talking about, I'm sorry, to the high, a little bit below the high, or above the high. That's where you want to take the trades, right? So again, it creates the new high, and then it creates a bullish candlestick pattern. All right. What pattern did it create here? It created a inverted head and shoulders. Okay. Shoulder, head, shoulder. What ended up happening? Price broke structure at this point. It retested back to an area of value, and then price took off to the upside. All right. Did that make sense to you guys thus far? If it made sense, type a three in the chat. All right, great. So now let's go to the downtrend. And again, you do not want to get caught trading against the trend. I'm going to say that again. You do not want to get caught trading against the trend. That's like you being disobedient to your parents, right? If your parents are telling you to go this particular way, but you keep going the opposite way, what do you think is going to happen, right? You're you're going to lose a trade. But in that case, when it comes to your parents telling you to do something and you do the complete opposite, what happens? You get in trouble, right? So that's that's the method that you're supposed to trade. Now, if we flip it to the downside, right? Price then now creates lower lows to create lower highs, to then create lower lows again to create lower highs, and then to create lower lows. All right. That's the method, right? You see, it's the same thing in the opposite formation, right? So again, right? Let's just say price, um, this was a higher low. Let's just say this was a higher low, right? And price broke this higher low. The moment that price broke that higher low, we wait for price to stop at this lower low point to then retest, right? Back to a deep area of value before it broke structure. Okay. So from boom to boom, we can just say price came back to a fair value gap level and we wait for price to close below that point. The moment that it closes below that point, we're looking to take the trade past the low, at the low, or a little bit above the low. All right. And then our SLs are above the highs of that area of value. Now we know, and I'm going to say this, if it breaks above an area of value, it was meant to. All right. The market truly isn't against you. The market has to do what it's supposed to. And if it does break an area of value, you know that you were meant to lose that trade, right? Or that area of value is not valid enough to actually take the trade from, right? So the moment that it breaks that area of value, right? We we just want to see if we can find another standpoint to where we can enter from. All right. If we can find another area that we can enter from and it's still following its trend and it's not breaking, right? A higher high or a lower high, then we know that we are still within a downtrend formation. Okay. In this case, you got the break of structure, price created the new low. And then what pattern did it create here? It created a double top. A double top either, right? These patterns either start a trend or they're continuations within a trend. Okay. So you got a double top, you got the neckline of the double top, right? And then price breaks below that lower low, creating a new low. Then price is looking to retest back to where? Price retested back to this structure level. Okay. What we want to see is we want to see price close below that structure level to then take the trade back below that low. All right. If this made sense to you thus far, right? Again, type a three in the chat. All right, great. Great. So now what we're going to do now, right? I just explained these things to you, right? So now what we're going to do is we're going to go to a real-time chart and we're actually going to look at it, right? We're actually going to look at it and go over these same scenarios, right, on those charts so you guys can see it in real time. All right. So if let me see, I'm gonna do it on this particular pair right here. All right, we're gonna do it on GU. All right, we're gonna do it on GU. So um again, it doesn't matter what time frame as long as you follow the method. All right. So let's find an uptrend first, right? Let's scroll back in the past. All right, let's scroll back in the past and let's find, right, some trade setups that we can go over so you guys are on the same page. All right. Let's see. I want to find a good one here. All right, can anybody tell me what this particular market is right here? All right, can anybody tell me this particular market right here? All right, we just went over it, but I want you guys to tell me what type of market that is. All right, right, ranging consolidation, great, right? That's a ranging consolidation market, right? Again, what happened before that consolidation came, right? Price was dropping, all right? Price was dropping, price consolidated, and price did what? It dropped again. Okay, that's just I want to show you guys that example, right? You see how that operates and how that works. Mind you, we're on a 30-minute time frame. Okay, I'm kind of want to work between a median because I know a lot of people like trading on smaller time frames, and then you have people that do like trading on higher time frames, right? But they all go together. You just have to find out which trend the actual trade is moving in. Okay, so you got your sideways moving market here. All right. Can anybody tell me this particular market right here? All right, this market right here. What market are we in here? An uptrend. Great, 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 Miss Debbie. Right, we are in an uptrend. We are in an uptrending market. Right, the market was once in a downtrend right here. Right, you got a small term downtrend. Right, a small term downtrend where it's making right. It created that higher high, that lower high, lower high. Right, price break structure. Right, these are great two examples right here. We can actually just use these two, right? Price break structure here. All right, you got your break of structure there. And then you also have your break of structure here as well, right? These are structure points in the market. The market creates structure points with these wicks, right? Wicks are extremely important. So price stopped here not only once, but twice and even three times, right? But the moment that price broke this level, right, where the price closed below with a candlestick or a wick below this particular structure point, right, that's letting us know that what the sellers are in the market. All right, so when price pulls back, right, remember I told you it's going to always pull back to one or three areas, right? In this case, right, the market pulled back, right, to an order block, right? If we look at this order block, this is one of the last down candles. I mean, this is one of the last up candles before price broke structure. So because that's the case, right, we want to find the deepest area of value the moment that price breaks structure. And this is the deepest area of value. So from this entire candle from wick to wick, right, this gives us our order block. All right. We see how price is wicking off at this level, but it's also closing below, right? We want to see candles close below. We want to see bearish candles close below. And we got just that, right? If we're looking at this, right, we got a candle that closed below here, right? Again, you place your SL above the structure point or the order block, I'm sorry, and then you're aiming at the low or towards the low. You guys see that? All right. And you see how it went directly to your take profit. Is it going to happen every time? No. Are you going to be in profit immediately every time? No. You might deal with drawdown. You might lose a trade, right? But a good majority of the times, if you're following the method the proper way, you're going to be on the right side more than you're on the wrong side. All right. So again, price took out that low. Again, if you want to take it to the low, if you want to take a little bit above the low, right? Or you want to take it past the low, how you're able to identify where you can take the trade to is look back to the left side of the trade when you're in a downtrend. All right, or even in an uptrend. But in this case, right, we want to go for the last down candle, right? This is the last down candle here to here, right? And that's where you can take the trade to. All right. You see how price went directly there. All right. This is your order blocks. All right. So the moment that price, right, broke structure, right, the moment price creates this new low, we see how it broke structure here, right? But when price created this new low, it's looking to retest, right? Right. What do we understand and what do we know? Remember, I told you guys, and if I didn't tell you, right, wicked areas are considered structure levels in the market. All right. So from the wick to the body gives us our structure level. All right. If we notice, right? All right. That's our structure point. Correct. Right. This is the only candle that truly closed above. But then what do you have? Right. We call this a fake out. Right. So price would actually go above the structure level. Right. But is that the deepest area of value that it can go to? It's not, but it's one of the levels that is actually playing off of. So it respected it once, respected it twice, three times, right? That fourth time it gave us a fake out, right? And then price went to the downside and closed bearish below. All right. And then what ended up happening? The trade went to the downside, took out that lower though that was created. But if you don't want to look at the structure level and you want to find an order block, right? What is the last up candle before the down move happened? Right? This is right here from wick to wick of that entire buying candle, right? Gives us our what? Our order block. What do you get off of that order block? You got a strong bearish candlestick, which meaning you can enter here with your SLs above this area of value, right? And then you're taking a trade back past the low. All right. So that's your breakup structure, like I said, right? And then ultimately, what ends up happening, right? What ends up happening is let's delete this. I'm sorry. Let's delete that. Right? We pretty much got those down, right? The moment that price breaks this level of structure, right? Because this was the last lower high in the market. The moment that price actually breaks this level, right? That gives us that's letting us know, one, that the market is potentially looking to change its trend. All right, but it does give you the break of structure that you're looking for. But remember, we're looking for the deepest, right? We're looking for the deepest area of value that price can go to, right? Before it broke structure, right? And if we're looking here, we see that this is one of the last down candles that broke structure right before it broke structure, which gives us our order block, our bullish order block, right? The ones we found here was our bearish order blocks. These are our bullish order blocks, right? When we're moving into an uptrend. Because what do you end up getting, right? From the sell candles wick, that entire candle, that entire body plays as an order
What is
block.
that?
I'm sorry, somebody
A cough.
can you mute your mic?
Yeah. Thank you.
Can you mute your mic?
Yes, bless me.
I'm not sure who that is. Okay, sorry about that. I think it was Miss Niche. Yeah, sorry about that, guys. But again, price comes right back down, right to our order block level, right? Do we have deeper levels of an order block? We do. We have one here that price didn't come to, right? From here to here, and we drag that across. Price never came back to that one. So we know in the near future, price is going to find its way back to this level, right? What I'm gonna do is I'm gonna actually make this go and I'm gonna extend it to the right. And we're gonna see if price came back to that level yet. And if it didn't, price will find its way back there. Okay. Um, but I showed you guys these order blocks, right? What do we get off of the order block? Ultimately, you got a double top, I mean a double bottom, right? A double bottom and an order block, right? And you have continuously bullish candles closing above this order block, right? Where do we take our entry? Right? We can take our entry off of this candle, or we can simply take our entry off of these three candles. When you get three consecutive bullish candles in a row, big or small, right? That's called the three white soldiers, right? So you can enter the market after that closes with your SL below your what? Your order block. And if you see, we always want to go for a 1-to-1 or a 1-to-2 or even a 1-to-3. Okay. A 1-to-1, of course, is the same SL that you have for your take profit needs to be the same SL that you have for your SL. All right. And then boom. If you want to go for a 1-to-2, of course, it gives your 1-to-2, right? 18 times 18 is what? 36. Right? So you gotta multiply. So whatever your SL is, if you want to go for a 1-to-2, you multiply your SL by two. All right. And then it'll give you your 1-to-2 risk to reward ratio. And as you see, what did price do? Price broke structure, right? We went for our 1-to-2 risk to reward ratio. And there you have it. The break of structure. Price creates that new high, right? Price does what? It retests back to the last down candle before price actually broke structure. So if we're looking at this, right, from wick to wick, let me take this extension off. I don't need that anymore. But what ends up happening, right? Price drives a little bit below, doesn't close below, but then what do you end up getting? You get a bullish candle closing above that order block. So for me, right? Enter here, I'm sorry, right? Enter here, SL's below that order block, and then we're aiming at the high, past the high, or a little bit below the high. All right. Again, if you don't know where you want to take this trade to, if you're not doing a 1-to-1 or a 1-to-2 or a 1-to-3 and you just want to take it back to an area of value, you simply just look back in the past for an area of value that has not been touched. Right. And if we see here, this gives us a humongous fair value gap. All right, what's a fair value gap, Gary? Well, you guys see how this wick of this bearish candle and this wick of this bearish candle don't meet in between the body of this candle, right? So you see, if I put this here and I drug this all the way up to this particular point here, right? And let's just say I did it also for this one, right? And let's just say these wicks actually meet. This does not this does not classify as a fair value gap because these wicks actually meet in between the body of this particular candle. All right. But because it's a fair value gap, we know price is going to work its way, right, back above that particular point. All right. Again, we at least want to go for a 1-to-1, 1-to-2, or 1-to-3. In this case, you could have potentially even went for a 1-to-3 risk to reward ratio. And if you see, you made your money, right? You will sometimes deal with drawdown. You will sometimes have a lesson. A lesson meaning a L. Sometimes that just happens. You know what I mean? You learn why you got that. You learn from it, right? And then you apply what you learned from that particular situation. Because win or lose, I always go over every trade that I took and I analyze and see why it turned out the way it did. All right. Again, what do you end up getting? You get the break of structure. All right. You get the break of structure, you get your new high being created, and then what do you have? You have the last down candle before price broke structure. So if I go from wick to wick, that gives us our order block. And as you see, we have a bullish candlestick closing above our order block. We take our entry, right? With our SLs below our area of value, and then we're taking the trade to below or above our high, right? Or we're simply aiming for a 1-to-2 or a 1-to-3 risk to reward ratio. All right, everybody got that? Does that make sense thus far? All right. And that's simply how the market works. That's simply how the market operates, right? It does these two things all the time, right? Sometimes you may get a consolidation market before this happens, right? And sometimes you may even get patterns, right? Because if we want to look at this as a pattern, we still could, because it will still classify as a double bottom pattern, right? Double bottom created, structure being broken, high being created, price comes back to our order block level, and then price takes off. Retest back to our area of value, takes off. Retest back to our area of value, takes off. All right. Sometimes price might not pull back to an order block. Sometimes it may just pull back to a fair value gap, like I showed you guys, right? How does a bullish fair value gap look, right? If we go, you see how this candle's wick and this candle's wick don't meet in between the body of this particular candle, right? Because that happened, this gives us our fair value gap level. All right. So along with this already being an order block level to here, we also have a fair value gap level that has not been touched that is attacked to an order block, which means sooner or later, if you guys look at this, price came right back to that level, right? One way or another, price found its way back to this level, back to these two levels, as I should say, right? And boom, you made your money. All right. When price got back to this level, it attracted back to this level. It was moving in a downtrend. It was creating, right, lower lows, right, then creating lower highs, lower lows, lower highs, lower lows, right, lower highs. Then price did what here, right? Yes, price took out structure, but it was filling up liquidity, right? If we notice how price just dropped here and it didn't have any type of like somewhat of a structure point at all, and it just dropped like that, right? Liquidity would show, right, either on a smaller time frame or on a higher time frame, right? In this case, what did it show? Right? Price broke structure and it created new lows, and then price did what? It came right back to a fair value gap level. Boom, boom, dragged out across, and what do you get? Price reacting off of that level not once but twice, right? You enter the market, you place your SL above those highs, right, of that area of value, and then you're aiming towards the low. Okay, is that good? Everybody got that? If you got it, type PO3 in the chat. PO3. Type PO3 in the chat if that has made sense to you, right? And if you have any questions, please feel free to ask them, okay? Because I will answer any questions that you have. If there's any pair that you kind of just want me to look at to kind of analyze, most definitely feel free to ask me that as well, or let me know what pair that is, and then we'll go over it. All right. But let me just take some of this stuff off, right? But that's the market. That's the market in retrospect. Like it's literally so simple that it's hard, right? A lot of people will think like, oh my God, trading is so difficult. It is so difficult. I don't understand. I don't get it. But it's fairly simple. It's fairly simple. Okay. You just have to be one, patient, you have to be consistent, and you have to be disciplined. All right. And you have to follow the method. If you follow the method, more good things is going to happen than bad things are going to happen. Okay. All right. If you have any questions, type a one in the chat. If you don't have any questions, type a three in the chat. All right. We got three. Good. All right. We got threes. That's good. Right. So, what I want you guys to do is I simply just want you guys to do this. Right. Let's I'm going to show you this setup right here because this is actually this is a really good setup right here. So, right, what did you get? Right, we see the market was actually moving in a downtrend here, right? Created a double top, right? Price broke the neckline. Price retest back to that neckline, right? Boom, boom. If we drag this across, this gives us our level of structure, right? From wick to body, right? This is our structure point. Okay. So now what ends up happening, right? Price breaks structure. And what does it do? Sorry about that. What does it do? It retests back to this structure level, right? It retests back to the structure level. And then it gives us our bearish candle that we would like to see, right? Again, if you don't know where you could potentially take a trade to, just look back in the past. All right. And if you look back in the past, there are going to be areas of value on the back end of the trade that has never been touched. So if I'm looking at this, I see that this is the last down candle. This is the deepest last down candle before price actually broke structure. Okay. And let me actually extend this because you're going to see how price came right back to that level. All right. Eventually it did. If it didn't do it now, it will most definitely do it in the near future. So we're gonna keep that level there. I'm not gonna go too far because I don't want to go back away from where I was showing you guys, right? But you got your breakup structure, you got your retest, right? Back to your area of value, then you got your candlestick, right? If I'm looking at this, I also understand and know that there's a fair value gap level here, right? So even if I don't want to go for this order block, I can indeed go for this fair value gap. And if you see here, price came right back to this level. All right, price came right back to that level. Why did Gary? Why didn't you put the box all the way back up to this candle? Well, because there's still space from these wicks and this wick of this candle that leaves a gap within price. So if I drag it all the way across, we see how price reacts off of our fair value gap level. Okay. Uh-oh. What happened? All right. Boom. Price came back to your fair value gap level. Let me mark it off as such. That's why. I got to extend it and then boom. Right? Price reached your fair value gap level, and then what do you end up getting? Right? You end up getting price taking out lower highs, right? And if it takes out a lower high and it gives you this breaker structure, right? That's ultimately letting you know that the buyers want to take over the market, right? If I look at this and I understand this is also a structure level. So if price, right? If price, let me put this down. There you go. If price breaks this level of structure and creates new highs, like it did here, create a new high, retest back to structure, took out that high, right? If it came back down to this level and it never could break below this point or close below this level, and it gives you a bullish candle back above, right? We can enter the market here, right? After that candle closes, we always want to enter after a candle closes, not when it's moving. You want to move, you want to take entry when a candle closes, right? And it gives you that fresh new candle. All right. So this candle came about, let's just say it came about around 8 a.m., right? Let's just say that, right? And you take your entry, you might deal with a little bit of drawdown, right? And then price ends up ultimately going in your favor. Okay. And as you see, that gives you a great 1 to 2 risk to reward ratio. You make your money, you go about your day. All right. Again, there's also a level beneath this structure point that price could definitely come to. And it was this level right here. This is one of the last down candles before price actually broke structure. So, and if you see, price came right back to this level, right, and rejected off of it, right? Boom, you got your rejection, you got the engulfing candle, you take your entry, SL below these levels, and you go about your day. Okay. What ends up happening is you get your break of structure, right? BOS, and then we're looking for price to do, right? Some of the same things it always does, right? If we look here, price created this new high ultimately, and then price came right back down to this particular structure level. Why is it a structure level? Because price stopped here and came back down, which makes it a structure point, right? And it gave you a strong wick rejection. So even if I drag this all the way across, right? This is a structure level. Did price respect that structure level? It indeed did. And then it also even created, right, an inverted head and shoulders. Is it exactly how I have it drawn? No, right? You got to understand some of these pairs are not going to create the pattern pretty. It's not going to look pretty all the time, right? That's why you have to train your eyes and study so that way you can see the things that you need to see. All right. Boom. You got your shoulder there, right? You got your head here, right? And then you have your other shoulder here, right? That gives you your head and shoulders pattern, right? And if you see, price took out the neckline and actually even took out this previous high, right? That makes sense. If it does, type a 3 in the chat, right? And remember, when I explained this, right? When it creates these patterns, right, at areas of value, that's showing you that price wants to continue to go in that direction. So if it's creating these market patterns that I showed you at the beginning, right, within the trend, we see them as continuations, right? Sometimes they start trends and sometimes they can be as continuation patterns for price to go in a particular direction. All right. You guys see that, right? Took out, price ends up breaking this structure, right? Creating this new high, and then price pulled back down to do what? To come back to an area of value. That's exactly what it did, right? What's the area of value, Gary? Well, if we look here, right? This is a structure point. Did wick rejections happen here? Did price fall back down here? Absolutely, right? So from bodies to wick, this gives us our structure level. All right. And boom. If you see, price came, but price never closed below, right? Price never closed below. And then it eventually gave you a strong bullish engulfing candlestick to the upside. You enter after that candle closes, your SL will be below that level. All right. And if you see, guys, it turned out pretty well. All right. So that's that's what the market does. That's how the market operates, and it's going to do that continuously. Okay. Um, with that being said, guys, that's pretty much all for the education side of things. It is Friday, it was NFP week. Um, so we don't want to force a trade, right? It's the end of the week, and if you do get in a trade right now, you're going to be holding it over the weekend, and brokers could potentially take fees from you. But again, we learned how the market operates, how it moves, in the areas that it comes back to right before it actually shows the direction that it wants to go. All right. For me, if this candle does continue to close strongly, I will be looking to potentially look to sell GBP USD, right? That's just for any, you guys that are on the call with me. That's something that you could definitely look to do going until, this week, or you can wait until next week to potentially take the trade, right? But you see how price came right back to this fair value gap, right? I didn't have my zone from here to here, right? Because price did retest back here, but it did not fully, right, give us, right, filling up this entire fair value gap. So, and sometimes it's not going to fill the entire fair value gap. Sometimes it's just going to go within the fair value gap to then just close below. All right. Um, but with that being said, guys, that's really all for today. Um, if you got any questions or concerns, please feel free to ask me. I'm always here for you guys. Right. You just reach out to me and I'll make sure that I help you to the best of my ability. All right. So with that being said, man, it's your boy Gary Scott, aka the Solid Pip Assassin, and I'm out.